Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through our daily technical analysis update for commodities. Again, we'll go through the dollar, the 10 and 30-year yields, go through precious metals and all the other commodities that I follow, and some ETFs. So it looks like we had a pretty strong day across the board for commodities and the overall markets. We'll walk through it together. I'll give you my financial opinion, and here we go. So let's dive in here. So we've got DXY. DXY was definitely weaker today. This does look like it could continue lower to the downside. We've got this large selling pressure days. We got the inverted bloody nose is what I like to call it. We do have some strong selling pressure today. This could head lower to this support region down here. Lower dollar gives you a tailwind behind everything. Now, when we look at the previous bull market, just to give you guys a little bit of perspective here. The last bull market, let me zoom all the way out. I've got this blue piece here. The last bull market for commodities, it started in 99, which started here. We had this increase in the DXY. The DXY topped out and then headed lower, moving from 2002 and onward. Now, does this have any sort of relevance to the markets? I think it does, because usually in an expansionary phase of real estate, and I know I'm going back to real estate and it's a little bit different this time. I get it. I understand. The dollar weakened. And when that dollar weakens, it puts that wind at our sails in some of these commodities and precious metals, things that are priced in dollars. So that's the sail that we get. And right now, if you look at it from a big picture view, if I kind of just go back to a 5-year, we've had a monster tear with the dollar going up from 2021 onward. And that is roughly when we started to see the inverted yield curve and all this other stuff really starting to push those boundaries. So what we're doing is we're looking for a topping pattern, and we do have a nice good wick at the top, resistance above us. And we could be trying to turn around here. We're not there yet. I'm not comfortable to say that we've topped yet, but hopefully we top soon. And right now we've got two little candlesticks. We'll see if this thing can extend itself down with some sort of momentum velocity behind it. The 10-year yield is lower today. So we had a lower dollar, down about 0.5%, with lower 10-year yield. We do have a wick on the bottom, unfortunately, where I think this could potentially be resilient up here. So think of it as a breakout here, where we break out, come back, and we could potentially move higher. It's a bullish hammer type pattern on the candlesticks. But weaker 10-year yield, weaker dollar, and weaker 30-year yield, this sets us up for a potential move higher in precious metals. It likes this type of setup. This is the 30-year yield. We go into the dailies here. It was down lower today, but it was much lower. I should say it was stronger than the 10-year yield. And what that does is it allows us to look at the curve as a ratio. And what I've noticed is between these lines here, whenever we have a increasing TYX to TNX, gold goes ballistic to the upside. And what we're seeing right now is we've come all the way down into a very low level of TYX to TNX ratio. So you would have been rewarded as an investor to buy in this vicinity here, precious metals. And with this ratio moving on upward, it seems to me that there's a strong correlation that we could potentially go higher when we're at this low point and working our way up. So today, when you look at it, if you take a daily perspective, we had a monster move in the TYX to TNX ratio, and this ratio is very low, signaling that we should be accumulating in this general vicinity down here, precious metals. And we look at precious metals. I'm going to go to the CRB index first. CRB index also heading higher. We're at that support line. Hopefully we can get some buying pressure and break on higher here. But looking at gold, we had a very nice bounce in gold today. We broke above its support resistance line. So that resistance line coming up, support coming down. We're also coming and breaking through this resistance line here. We kind of took a hot sword, cut right through the butter today and cut through those two resistance lines. Hopefully the momentum can continue. Hopefully those conditions can remain positive for gold and silver to move higher. So gold looks good. Silver looks really good. Nice big fat candlestick today. Looks very bullish in my eyes. And hopefully that can continue higher. We have to look at the ratio of the TYX, TNX. And what does that mean? It's the 30-year yield versus the 10-year yield, and the curve is uninverting. This is where a lot of the commodities start to go ballistic. Uranium goes ballistic in this type of conditions. So does gold and silver. And you usually get a nice good surge in the beginning showing you like, hey, we're here, we're going to start going. Platinum also surging higher, 5%, looking quite strong. Silver being the best today in terms of performance. And hopefully this is a turning point. I'm not going to say it is. We got to see some continued buying pressure for me to be convinced that it necessarily is. XAU to gold ratio, the gold and silver mining companies, I think that they're looking strong. Obviously, we had some good movements today, but I think more work is needed. We got to break through this resistance. We have to break through the downtrend line that we have to break through that eventually. And then I think you're going to see a big, massive run. The question is, are the market conditions changing favorably for these metals right now? I think they are, but we don't have confirmation of it. So yes, it's starting to develop for them to turn, but we don't have confirmation saying that we've broken anything. So looking at SILJ, we are getting that bounce off of that support area that we were talking about. If you've been following me, I've said, hey, look, we've got good support where this white line is. Good couple of bounces off this. We've got support underneath it. Not a bad time to be looking at it. GDX, another one that says, hey, look, we've got support underneath this. We've traded here a lot before. And usually when you trade like that, and you get a nice big bullish engulfing like we had last week, that we could bounce higher. And we're getting that bounce higher. Now we have to see, hey, look, is this going to be sustainable? Are we going to continue higher with the market conditions? I think it is, but we're going to have to see what the dollar does. We're going to have to see what the 10-year, 30-year yields do here in the short term to see if that is the case. We have a bounce today, but we have to now see some follow through. Looking at crude oil rocketing higher today. Is this a bottoming turning point? Again, we're early in this move. I think things are progressing quite well. We still need to break the downtrend. If it's just a simple downtrend line through here, we haven't really broken through that yet, and that's what we want to break through. But good positive development today. It's looking better. We just have to see if we can break. Natural gas still getting some selling pressure, although we do have a nice good hammer pattern setup. That usually indicates that the buyers are stepping in here. That's why there's a wick at the bottom. There's wicks at the bottom here. And it looks like the buyers are trying to get positioned in here. In my opinion, the winter months are going to put pressure on higher natural gas and oil prices. Demand from China is coming online for oil. We've got people positioning in the companies themselves. I do think that we're getting close to a bottom down here for natural gas. Is this the ultimate bottom? It doesn't matter if it is or isn't. If we bounce it around down here, I would be an accumulator in these companies. XOP, yeah, you know me. I have to say that. Heading higher today, nice little gap, kind of an island gap here. What we call this the island, because we gapped lower and then we gapped back higher. Will that gap be filled? I'm not exactly sure. I'm not in the gap camp, but it is looking better. We've got some strong buying pressure, that's for sure, across the board. And highly depends if we can break on oil to the upside. There is some sayings around, some writings around about OPEC cutting production. We'll see if they cut production or not. But that's not really why I'm investing in it. I'm investing in it because I think we're going to be tight coming into the winter months. There's going to be natural gas to oil substitution. I said that right. And all of that going down. So I think that demand for oil and natural gas will be very high this winter. OIH, the energy service companies, also gapping higher, just like the exploration production companies. I think this is a very good spot to be looking. Energy service companies are very undervalued. You back out, they are way down there. I like it down there quite a bit for a lot of energy service companies. If you guys need help picking some companies, definitely sign up to the finding-value.com that you see in the lower left there, and become a platinum member. And I go over all of these companies that I think will do very well. We've been accumulating them, or at least I've been accumulating them, I should say. Uranium futures pricing looks, we're going sideways here. We got maybe a little bit longer to go, and then I think we're going to go, hopefully, vertical, Goose, right? Going vertical, hopefully. Sprott Physical Uranium Trust on the monthly candlesticks looks really good. We've got a nice big green candlestick and then the small pullback. I see that a lot before a move higher. We zoom into the weeklies. The weeklies are getting a bloody nose. I like what it looks like. We go into the dailies, and the dailies also have a little bloody nose. That means we've got full alignment on all time frames, at least for the Sprott Physical Uranium Trust. That usually is going to resolve itself higher. We're above support. Good risk-reward area to be looking at uranium companies. URNM also looking a little bit better today, getting that bounce in its step again. We've got on the monthly candlestick, granted this is a new monthly candlestick here, we're coming into some support underneath us. We go to the weekly candlesticks. We do have some selling pressure on the weekly candlestick basis. We need to see what we do this week to reverse this course. Looking at the dailies, we're looking all right. We'd like to break to the upside, but we still have some good downside momentum. So I think we're going to go sideways. Let's see if we can get some momentum to the upside here and do some sort of breakaway to the upside off this support level. That's what I'm hoping for. CCJ up a little bit. Yeah, we got a little wick at the top there. I don't like seeing wicks. I like finishing strong. This does look like we could put in maybe a little downward move to the downside first before heading higher. Again, short-term price predictions are the least reliable. Looking at this, we do have more selling pressure than buying pressure. This does look like we could bounce back a little bit before heading higher. So the dailies and the month and the weekly candlesticks are confirming potentially a slightly lower move in the short term before heading higher. Nothing massive, just a small, maybe little pullback before moving higher. And guess what? News or anything can change this. Overall market sentiment could change it where we could go and blast to the upside. So I don't trade the short term. I don't do anything on the short term. I accumulate, I stay long, and I'm going to stay long because I think we have an energy shortage in all of these metals and oil and natural gas liquids. TAN looking better. We're still above that breakout on the monthlies. The weeklies still look all right. We do have a little bit of selling pressure here coming back and doing that return move. And the dailies, we're getting a little bit of buying pressure with the overall markets. The question is, will the overall markets remain resilient? Is the change in sentiment going to be sustaining? I think what the sentiment change is, I think people think that we're going to have to reverse course. There's been some talk about a potential reverse course in maybe the dollar being too strong in relationship to other currencies, that we should probably be looking about emerging markets and not destroying them. And there could be a Fed pivot or a lessening in the increase of interest rates. But that's yet to be seen. I know that's all speculation out there at the moment. We've got the COPX. COPX is getting some buying pressure here, looking a lot better with the overall markets. So that's looking a lot better. On that perspective, we're using this support line right here for hopefully a move higher. Hopefully. Scrolling down to rare earth metals. Rare earth metals are also on support. Overall market strong. The rare earths are also getting some support right at that support level. Are we going to turn here? We've got a nice good bullish engulfing. We very well could be bottoming and turning higher. Looking at lithium, lithium also getting the bounce with the overall markets. We have support underneath us at $64. That's what we're looking at there. SPX, so getting a little bit of buying pressure today. Will that remain? That is the question. Or are we going to go lower? And I don't know, guys. I don't see a clear path. We're kind of at this support level through here. We have to see what happens over the next couple of days to see some follow through in either direction. And that's the same for the US NASDAQ composite. We're at that support level. Is this going to hold? We'll have to find out. We're still in a downtrend. We haven't broken out of anything yet, and we have to see if that support line holds. EEM with a weaker dollar coming up again. We're right at support. Again, we're going to have to see if this long-term support line holds right where we're at. We've got a lot of downside momentum coming at this. And if they reverse course, we very well could see emerging markets move on higher. But right now, there's a lot of stress in the system currency-wise with the increasing interest rates and the stronger dollar. It is stressing emerging markets currencies. And that's what this sell-off, I think, is exacerbating this sell-off. Looking at XHB, the home builders, we're getting a bounce here today. Again, I got to see what's going to happen with the overall markets. We got to see follow through. We got to see some momentum build. Lumber also moving sideways. Not much to really say there. We've got cocoa futures moving sideways. I still think it looks good. Or maybe we bounce a little bit more sideways. Wheat moving sideways. Still looks all right in my book here. Doesn't look too bad. Soybeans. This is broken to the downside. I think we're going to see a downside move here still. We could come up and do a retest move before heading lower in the short term. Corn looking all right. We're losing a little bit of momentum. We're starting to round off a little bit. So we could see some selling pressure in corn. Copper looking a little bit better, just hanging on, moving sideways. Again, let's see what the overall markets do here. I'm not calling victory yet. Let's see some follow through. Let's see some momentum build. Mu also getting some buying pressure. We do have the bullish engulfing a few trading sessions ago. That's still in play. We could see a move higher in Mu. Still looking all right. And we do have support underneath it down at 69, which it's still not ruled out that we could get down there. We have to see what the overall markets do. We still have a lot of selling pressure in this on a monthly candlestick basis, and it highly depends on what we do this month. Scrolling to aluminum. Aluminum is ultra volatile. We're at that support level. We'll see if this support level holds. But today, we were up a little bit today, and we'll see if we can get some momentum and legs underneath us. Looking at Baltic Dry Index, basically right at that support resistance line that we've got. This is a very strong support resistance line running all the way through here. Once we get above it, and I think we will, we've got a breakout, a back test, and I think we'll get a run out of this thing. I think it's coming. And the overall shipping, dry bulk shipping area looks very good. So that's what I've got for today, guys. Hopefully you enjoyed it. Give me a thumbs up. If you guys need help navigating these markets, definitely sign up to the Finding Value membership, Platinum membership. We do have a question and answer session coming up Sunday, 5 p.m. Mountain Standard Time. If you want to attend it this next weekend, I'll update that on the website. And we talk a lot about these companies. I did shift a little bit around in the portfolio, kind of concentrated the portfolio in what I think are the strongest oil and natural gas companies. And yeah, that's what we've got for today. So if you guys like this content, definitely give me a thumbs up, subscribe to the channel, and we'll catch you next time. This is Finding Value.